Hey, hello, investors and future investors. Have you ever held on to an options trade for just a bit too long or only watch your hard earned profits vanish? It's frustrating, I know, because it has happened to me in the past. But in today's video, I'm going to share with you the 80% rule, a simple yet powerful guideline that can save you from overtrading and help you lock in consistent profits. If you're looking to take your options trade to the next level, then welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make weekly revenue. For today's video, we will be covering the 80% rule, and we're going to break it down into three parts. Firstly, we're going to decide when should the 80% rule be used. Then we're going to do the exceptions to the rules. And lastly, we're going to do the effect of the 80% rule with buying options. Now, as you guys know, I am an income option trader, meaning all the option strategies that I employ is geared towards making premium and growing my portfolio. So, what is the 80% rule? Right before we dive into this rule of itself, let's quickly break down what it applies to. The 80% rule is a guideline most commonly used in strategies like selling cash secured puts and covered calls, or any premium selling strategy like credit spreads or iron condors. Now, these strategies rely on collecting premium, and the goal is to manage risk while maximizing profit. So, what exactly is the 80% rule? It's quite simple. When your trade has captured 80% of its maximum potential, close the trade. Now, I know you can hear the stress in my voice, so I'm still going to repeat it. Close the trade when you have captured 80% of the maximum potential. Now, you guys know how we do on this channel. We like to show you exactly what we're doing in order for you to not only follow along with us, but you can employ these strategies in your own portfolio. That being said, for today, we're going to be using one of my favorite stocks, which is going to be Marathon Digital, ticker MARA. So we're going to step right in using Mara. I'm going to show you a live example when I implemented the 80% rule. Now, I have several option strategies on Mara right now, so this is going to probably take a while. Try your best not to get confused. So let's go ahead. We're going to go directly into Mara stock and scroll down in order for us to find out the exact strategy that I use this on. So let's go ahead. We're going to go down to all my options all the way to the end. Then we're going to go ahead. We're going to go to show more. Okay, so here's the recent history of myself trading with Mara, and as you guys can see, it has been a lot. So what I'm going to do first, I'm going to go ahead and show you guys where I actually closed the trade, which is going to be right here on 4/12/6, but I did close it on November 29th. Let's go ahead and open it up so you guys can actually get proof of how this is done. Okay, so as you can see here, I did close two Mara option contracts for $17 a piece, as you can see right here, and the total cost I spent was $32.06. Now I'm going to go ahead and show you the first trade in which I was able to close this at 17 cents a piece. Okay, so here we are on the initial trade. Now for the initial trade, I did open up two contracts on Mara, which is going to be sell put at a $23 strike price. And I did receive 0.87 per contract, or $87, for a total premium of $173.94, or let's just round it off to $174. Now, as I just showed you, my total income was $174, and before expiration date, I closed it off, and I did close it off for right here, as you can see, $32. Now, if you were to divide the 32 by 174, that's going to give you 20%. So I close it off at 20%, which leaves me with an 80% gain. Okay, so now we're going to go ahead into a real example, and we're going to be using Mara once again. And while we opening up Mara, I'm going to give you three key reasons why the 80% rule is a game changer. Number one is going to be the time efficiency. So once you've captured the 80% of the premium, the remaining 20% often is not worth the risk or the time. Closing frees up the capital to deploy into new trades. Number two, markets are unpredictable. Waiting for the last 20% exposes you to sudden price swings, news events, or volatility spikes that could turn your winner into a loser. Always remember that. Thirdly, consistency over perfection. Trading is about being consistently profitable, not being perfect. By following the 80% rule, you're prioritizing steady gains over emotional decision making. Okay, so there's no better learning than actually showing live examples. So I do have some Mara contracts open, so we're going to use that as our live examples. So as you can see here, I have Mara puts open for $23. So let's go ahead. We're going to scroll down and I'm going to walk you through the trade and I'll show you exactly how to use the 80% rule in order to know when to close off these trades. So as you can see here, my expiration date is going to be 12/13. The average price I received for per contract is going to be $1, or in option terms, that's going to be $100. So I do have two contracts, as you can see down here. So I did receive $200 for opening up these two options on Mara. Now, the date I did this was yesterday. Now, if we go over to the left, if you're going to use the 80% rule, this is how you know when to close this trade. And Robinhood makes it quite simple. Under total return, once this here, you see where it says 6%, once this goes up to 80%, that is when you should strongly consider closing off the trade. And that's how easy it is to close the trade with an 80% win rate if you already have the trade open. So here's a section option you can do. As you can see at the top here, it says buy to close. I could go ahead and pretend I'm going to be closing out the options. So what I'm going to do, I'm going to put in the amount of contracts I want to close. We're going to do 2 for this example. And now I'm going to look for the 20% mark right here. So here I'm going to put 0.20, and 0.20 is going to give me an 80% win rate. So 0.20 plus 0.80 is going to give you 100%. So hopefully you guys follow that. So the way this works, you could also go down here and hit good today or good till cancel. This is way better. What this does, it helps you to not look at your computer all day. You go ahead, you hit review and you execute the trade. So what this does, whenever Mara hits my 80% win rate, Robinhood is automatically going to close out my trade and I'll be able to lock in my profits even if I'm away from my computer. And that is how you employ the 80% rule to stay in the game. Now, let's talk about exceptions. The 80% rule is not set in stone like all other rules. There are two scenarios where you might just want to adjust your strategy. Number one, if there's a little time left until expiration and the position is far out of the money, you might decide to hold for the remaining premium, which goes without saying. So if it comes to December 13th and I'm 95% up, then I'm just going to hold it until it closes and let it be assigned. The second time you're might want to adjust the rule is if the trade is moving against you and you're nearing your risk tolerance. Closing early, even at a loss, can still save you from making even larger losses. Also, you might be wondering, does this rule apply to debit spreads and long options? Not usually. So the strategies that use debit spreads and long options have a different risk reward dynamics. The 80% rule works best for premium selling options. Now, if you do want me to make a video about what rules can be used whenever you buy options, please let me know in the comments below. So investors and future investors, the 80% rule is a simple, practical strategy to lock in profits, manage risk, and build consistent trading edge. Remember, successful trading is more about discipline and sticking to your plan than trying to predict every market move. Now, if you found this video helpful, don't forget to like, subscribe to the channel, and hit the notification bell to get an alert when I post a video. And also, please let me know in the comments below, do you follow the 80% rule or do you have your own approach to managing options trade? And until the next video, keep pushing your investments.